What's going on, you guys? This is Aaron from Departures Capital, and welcome to the video. In this video, we're talking about our top 5 gold stocks for 2020. As requested, this is the most requested video on the channel right now, so I decided to make it for you guys. I hope you like these picks. For anyone who's just tuning in right now as a one-off, hasn't subscribed, or doesn't follow our channel, here at Departures Capital, we're heavy gold bulls. I've been this way for a very long time, and it's nice to see gold finally shining. So in this video, I'll break it down for you guys. First, why gold has been running, or at least, my personal opinion as to why I think gold has been running, but this is the opinion of many analysts, so you can take that with a grain of salt. And then we're going to dive into the 5 companies, and then I'll just give my outlook on the sector moving forward into 2020 and 2021. So I hope you guys enjoy this video. If you do, please support my channel and don't forget to smash that like button. I really appreciate that. It takes 1 second. What's more important is if you do really like these videos, learning about investing and following the market every day. We have a daily show Monday to Friday that covers the stock market and all the great news, so don't forget to smash that subscribe button and the bell for notifications, and I'll promise to bring you guys daily uploads. So anyways, let's dive into this. The first chart I want to talk about is a gold chart and the long-term gold chart. So we're going to be talking about gold from around 2008, 2009 all the way up to 2011 and why it ran, and then what's been happening recently over the last little while, why it's ran this much, and why I think that gold's going to run a lot higher than just $2,000 per ounce or wherever it hit back there at the peak in 2011. So first, let's talk about the global financial crisis, what happened, and then why gold ran. So basically, the global financial crisis happened, the meltdown happened, the US real estate market, people lost confidence in the financial system. They thought that the whole system was going to crumble. We saw the Lehman Brothers go bankrupt, yada yada. So the Fed started to do quantitative easing, which is essentially just printing money, diluting the US dollar, pumping the system with liquidity, and that's what got them out of this whole global financial crisis, and the market continued to run on. But this is not the S&P 500. This is a chart for gold. We saw gold at that point when they started to do QE have one of the most historic runs in history, running about 300%. And for anyone who doesn't follow silver, we're not talking about it in this video. I'll make more videos about it, but it ran 500%. But long story short, gold had one of its most historic runs, and then things started to get better, and the people started to invest in equities. Gold wasn't really needed as much as a safe haven, and then it sold off quite a bit. There was also some anticipation that the Fed would inevitably start to raise interest rates because things were good, and we know that gold does not perform well in a high interest rate environment because gold doesn't yield any interest as an asset. It's purely a safe haven. Anyways, guys, we saw the Fed start to raise rates, in fact, in late 2018, and the market tanked, and so did gold. What happened in late 2018, early 2019 is the Fed stopped that and said, wait a second, we can't do this. The market's tanking, everything's tanking. The bull market is going to essentially run out of steam. So what are we going to do? We're going to start to lower interest rates. So they started to lower interest rates. And now let's zoom in on what happened. So lower interest rates generally directly correlated with the price of gold moving up. So we saw gold start to move up. But let's talk about this whole global illness, what's going on right now, and what has the Fed done different. So not only did they drop rates to essentially zero, but they pumped the system and will continue to pump the system with what they're saying is almost unlimited quantitative easing. Unprecedented amounts, nothing compared to what they did in 2009. So if we compare history and say, oh my gosh, gold ran 300% when they started QE 1 and 2, it ran 300%. What do you think is going to happen this time around? Personally, I think we're just getting started. Now, you guys can see my other videos about gold going to 3,000. Bank of America upgraded their 18-month price target on gold to 3,000. So that's a major financial institution. Central banks have been buying gold like crazy, and a lot of the big banks have in fact upgraded gold. So the bullish case is there for gold. The reason why I've been talking about gold for so long, especially now, is I like a sector where the underlying fundamentals are there. The fact is quantitative easing is not going anywhere. They're not just going to stop it. I don't think they can stop it, which provides a solid foundation, in my opinion at least, for the price of gold. So that's why we're talking about it, and that's why I think that this is going to continue for the next 2 to even potentially 5 years. Now, of course, if gold goes like crazy, all my investments in the gold sector, I eventually will take some profits because, like we saw, gold ran for a solid couple years, but eventually it started to plateau, pull back. This is the economic cycle. So it can't be bad forever. It can't be good forever. And that's just my opinion. So, all right, guys, so the next chart we're going to compare. These are the 5 companies, in fact, that we are talking about today. We're going to go a little bit more in depth, take a look at their mines, where their mines are, what is their production capacity, how many ounces of gold will they be producing annually, and at what costs. So the first thing I want to teach you guys about, for any of my new subscribers, gold investors, people who don't know much about gold mining, there's a metric called AISC, that's all-in sustained cost. How much does it cost a company from start to finish to mine a gold, refine it, sell it on the market? So for example, if a company's mining gold for $1,000 all in sustained costs, the price of gold right now is 25 or 17.50. They're making about 700 to 750 bucks per ounce. So consider that a very important metric. How much can they produce 1 ounce of gold for? So let's take a look at the chart. Let's take a look at the performance of these 5 companies. Which companies are there and how have they done so far? So the worst performing one is in fact Bluestone Resources. We'll get into the charts for that. It's our smallest cap one. And the best performing stock is in fact Newmount Gold Corp, up 39, almost 40%. So I took this chart pretty much the day of the crash. I believe it was February 20th when it started. It's crazy to see that all these companies except one are in the green. And we're talking 20, 30, almost 40%. Meanwhile, the S&P 500 is still down 18%. So let's dive into these companies. Let's talk about all the interesting ones. So the first one I want to talk about, it's a very unique one. It's a streamer. They don't own any mines. They simply just use a streaming approach. They have an agreement with the mine. They buy the commodity and they just sell it in the open market. So Wheaton Precious Metals, $24 billion market cap with a 1.07% dividend yield. So I want to say the big boys, even in the mining sector, are paying dividends, not as good as, a utility company, a bank stock, a telecom stock. But it's nice to see us getting a little bit of income. So 52-week range of 26.50 to 56.24. So I have been watching this stock a lot, guys. And in the past, we'll say 1 year, I did end up selling this stock and trading it in for another gold miner. I believe it was in 2019 when this thing started to get close to 40 bucks. Watched it for a very long time. And when I saw this thing drop to like 26 bucks a share, I remember the day. It plunged like crazy, and I believe I was able to grab it somewhere around 30 bucks per share. So this doesn't always happen, but holy smokes, it's been a pretty good trade so far. And I plan to just hold this thing long term. I've always liked this company, but now, they've evolved into such an even better company. So let's take a look. Streaming allows Wheaton to purchase generally byproduct precious metals or cobalt production from a mine that it does not own or operate in exchange for an upfront payment plus additional payment upon delivery of each ounce or pound. So we can see their global diversity, guys. They've got mines here in North America. They've got mines here in South America. And then across Europe, of course. You can take a look at all their projects. We've got silver and gold balance. Some are 25% silver. Some of the mines, they're taking 100% of their silver and 50% of their gold. 100% of their silver, 100% of their silver and their gold. So you can see it all there. It's a very interesting company to research. And that is my top pick for diversity. And the fact that they use a different business model. Now, this business model has been very successful. If we take a look at their 5-year chart, it speaks for itself. The stock is up dramatically. It's at all-time highs right now, the highest the stock has ever been at. So clearly they're using a very good business model. Now, the next company we're taking a look at, this company is drastically different. This is Bluestone Resources with $158 million market cap. It's the smallest cap stock we've selected here. Now, if you go to the channel, we have interviewed their CEO, Darren Klink. Fantastic interview. That was last year. We also talk a lot about the company in another very in-depth video. But what I like about this company so much is the fact that it has such a low all-in sustained cost. It has about an 8-year mine life. And the analysts are just super bullish on this. So 52-week range at 85 cents to $2.12. And we did see this thing run up before the whole crash. And it crashed quite a bit. It crashed about 50% during the whole CV illness, and now we're back up to $1.93. So I wanted to talk about their Cerro Blanco project. This is their main project in Guatemala with 100% ownership, 8-year mine life, underground, 146,000 ounces of gold per year average. And now let's talk about their all-in sustained cost. So I pull up their investor presentation, $579 all-in sustained cost. That's what they're expected to be producing it at. And let's take a look at the analyst coverage. Like I said, the analysts are so bullish on Bluestone Resources, and we can see here that with an average price target of $3.10, the highest price target of $3.25, and the lowest price target of $2.65. I mean, that still indicates, an over 30, almost 40% upside. So these small cap ones are definitely more risky. The fact that they only have one project. So whatever happens in the country, if something negative happens in Guatemala, restrictions change, or, the country as a whole just, it becomes politically unstable, that's something to worry about. That's something that we should know and take into account when investing in the small cap sector. But so far, this stock has been an awesome performing stock, and I definitely like to see it. All right, guys, that brings us to our third company. And I've gotten a lot of requests for this company, Kinross Gold Corp. I've always loved this company. It's a fairly large cap gold producer, $12.56 billion market cap, doesn't pay a dividend with a 52-week range of $4 to 10.19. So I believe Kinross did hit another fresh 52-week high on the day. But as we can see, in terms of its 5-year chart, back in the 90s, Kinross was like a $30, almost $40 stock. So this isn't the highest it's been, but even if we look back to 2009, 2010, the stock was in the 20s. So comparing history, it looks like we've got room to run. But of course, many things have changed since the stock was trading that high. Now let's take a look at their operations. So in terms of their gold production, 21% from Russia, 23% from West Africa, and over 50% from the Americas, with an all-in sustained cost of $983 per ounce, 2.5 million ounces per year in 2019 in terms of annual production. So they're producing a lot of gold. Now, their profit margins aren't as good, around $1,000 per ounce, but still pretty good. But I still like the company, and I like the diversity. We've got Russia, we've got Africa, and we've got the Americas. So Kinross definitely one to take a look at. Of course, I'm just outlining these companies. I'm not talking about their financials. I'm not talking about individual news. So I highly encourage you guys, if you are researching these companies and planning to invest in them, do more research, do your own due diligence, and don't make any financial decisions based on this video. This video is not financial advice. So let's dive into the next company, Barrick. Barrick Gold, the world's second largest gold producer, hopefully the world's largest gold producer soon, with a $67.9 billion market cap. Holy smokes, guys. It feels like yesterday when I was looking at this company and it had like a $49 billion market cap. So valuations have increased dramatically. Barrick is still yielding over 1% with a 52-week range of, get this, $15 a share to $40.13. So the stock has effectively doubled. We saw the stock ran like crazy, and right now, these large cap miners are doing so well because they've got multiple mines. They're just pumping out the gold, fairly decent all-in sustaining costs. As long as you're under 1,000 in this market, you're pretty much making a killing, in my opinion. So let's take a look at Barrick's global operations. So for gold, in terms of their 2020 full year guidance, 4.8 to 5.2 million ounces, with forecasted all-in sustaining costs of $920 to $970. Perfect, guys, we found this. So this is their PDAC 2020 investor presentation, and I want to show you where their gold's coming from. In fact, we were actually at PDAC. It's the world's largest mining convention. So let's see where the gold production is coming from for Barrick. So in terms of North America, we got 15% coming from North America, 15% coming from South America. We've got 15% coming from Russia. In the Asia area, we've got 18% coming from that area, 21% coming from Africa, 11.5% coming from Australia, New Guinea. So truly a global company. It's one of the biggest companies in the world, and I definitely favor Barrick because of that. And the stock has performed great because of that. So keep Barrick on the top of your watch list. It has been one of the top performing stocks as well. And now we're going to get into the world's largest gold producer, Newmont Gold Corp, with a $71.85 billion market cap, paying a 1.63% dividend. So I got to say, guys, Newmont just recently raised their dividend. It's at 1.63%, which is, I believe, one of the best dividends right now in the industry. Now, if the rest of these companies continue to rack in the money, grow into their valuations, they're probably going to have to raise their dividend as well, especially if gold keeps on rising. But it's been fantastic so far for Newmont. And I've owned Newmont well before they were Newmont Gold Corp. I owned Gold Corp, which was then bought out by Newmont. Gold Corp shareholders got Newmont shares, and the thing started trading around the 40s. Let's take a, 40.01. It's currently trading for 90.79 now. So I've been a long-term investor in Gold Corp for years before they were Newmont Gold Corp. So very happy with the performance so far. 52-week range of 40.01 to 90.79. Now let's take a look and see, why has Newmont done so good? What's the company up to? First, I wanted to take a look at their mines. So in terms of their operated assets, right now they've got mines all across the world: Australia, South America, North America, Africa. They've got a couple projects, and they've got 2 joint ventures on the go right now, one in the Caribbean and one in Nevada. So let's take a look at the facts for Newmont. So 8 world-class assets, 2 emerging world-class assets, 90+% of the production in top-tier jurisdictions, 95.7 million ounces in gold reserves, 63 million ounces in geo reserves, 6+ million ounces of production per year. That is the world's #1 gold producer. AISC has been declining to $800 to $900 per ounce expected by 2023. 2.7 billion from full potential since 2013. Last but not least, guys, capital allocation. Industry leading quarterly dividend increased by 79% to 25 cents per share, $1 billion in share repurchase program. So holy smokes, guys, over $5 billion worth of liquidity. So a healthy balance sheet, diversified operations, steadily growing their dividends. So this is a pretty awesome company in my opinion, and it's been a top performer in the portfolio. So that's my outlook on gold. And in terms of, small cap, mid cap, large cap right now, what do I think? I do favor the large cap, but I do think that there is more potential. In the small cap stocks right now, I believe that there's definitely a spot for them, those exploration stage companies, those pre-production companies like Fosterville South, Turmalina Metals, Bluestone Resources that is included in this video. But I think, anyone who's looking to invest in the gold sector, they should allocate a little bit to that small cap position. But if you're risk adverse, go for those large cap ones with multiple mines where if one mine shuts down, you're not going to lose half your investment, or, your whole income stream doesn't depend on that one project. So these are all factors and things to keep in mind when investing. But this goes for every sector, large cap, small cap. The small caps tend to be more risky, but the small caps tend to be more rewarding. But they also take a lot more research and due diligence. So good luck, guys. I hope you enjoyed this video. Let me know your comments in the description, what you think about gold, what do you think about the companies. If you have your own picks, feel free to drop those below. I'm out of here, guys. Always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell stock because you heard it on here. Buy or sell stock because you've done your research, you've done your thorough due diligence, and you make your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.